Kia ora, and welcome to Wednesday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news that's dominated by Trump's show of power and theatrics. Toxic tech bro masculinity is on full display there. Senior female leaders are getting the chop or sidelined. But so far, there is also backtracks on trade threats, so we'll stand back and await any real impacts. But first up today, there was another full dairy auction, and it was a modestly positive one, although volumes sold were seasonally lower, the least since July 2024. Overall, prices rose 1.4% from the last full auction 2 weeks ago, and perhaps the detail is more interesting than the overall result. Whole milk powder was up 5%, skim milk powder was up 2%, and both butter and cheddar cheese had better than 2% rises from the full auction last time. That takes the whole milk powder price to its highest level since June 2022. Stronger demand from China is part of the reason for today's rise, but better demand out of Europe helped too. In New Zealand dollar terms, overall prices were up only 1%, as the New Zealand dollar rose and is higher than 2 weeks ago. From the US, the flurry of presidential executive orders is creating an opening for China to lead on some key global initiatives, from health and the WHO to climate change. While the US is becoming more isolationist, China is finding openings to be less so. The world's power blocs are getting new boundaries. In Canada, their December CPI data brought few surprises, up 1.8% when a 1.9% rise was expected. But overall, December prices actually fell from November and by slightly more than anticipated. Some sales tax relief had a part to play as well. With this result, inflation remained within or below the Bank of Canada's midpoint target 2% for the fifth consecutive month, adding to current expectations of further rate cuts this year. They next review that official rate on Thursday next week, New Zealand time, and their current rate is 3.25%. But trade relations with their suddenly unfriendly southern neighbour will dominate how they approach this. In China, 15 of their 31 regional governments have set growth targets for 2025 less than they had for 2024. Only one raised its target. Basically, soft domestic demand and an uncertain global trade outlook is motivating the pullbacks. In Germany, any green shoots they may have been seeing have been snuffed out by households in defensive mode there. The ZEW indicator of economic sentiment there fell in January from December, and by more than expected as inflationary pressures and their perceptions persist. But to be fair, this sentiment index is still positive and has been since October, just less so. Later this morning we'll get the December REINZ results and the fourth quarter New Zealand inflation result. The RBNZ's February 19 OCR review will be influenced by that. The US Treasury 10-year yield is now just on 4.58% and unchanged from this time yesterday. And the price of gold will start today at $2,740 an ounce, up $33 from yesterday. And oil prices are unchanged at just over $76.50 a barrel in the US, while the international Brent price is down 50 US cents, now just on $79.50 a barrel. And the Kiwi dollar starts today at just under 56.6 US cents and unchanged from this time yesterday and holding its recent gain. Against the Aussie were unchanged at 90.4 Australian cents. Against the euro were also unchanged at 54.4 euro cents. That all means our trade-weighted index starts today just on 67.1 and again unchanged from yesterday. And the Bitcoin price starts today at $105,307 and down 1.3% from yesterday. Volatility over the past 24 hours has been high though, at plus or minus 3.3%. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.